proceed from where we left. We can proceed from where we left last time. I think that is to do now a question on economic value added from past paper point of view, because we have already done like an example, which is we did last time, we did this past paper. And I think after that, we did an economic value added issue, which is this one here, which I was trying to show here. I think previously, last time, I was trying to show you can calculate it in two versions. Somebody was asking me about why I was taking away this tax. So I got the issue letter. So if you calculate this, you could check. It could give the same as that, whether you start the profit. This was a profit before tax, actually. This was profit before tax, which was given there. So we went through that and we said that they usually adjust those two factors involved. One of them we said they adjust the issue relating to, this is before tax. They adjust the profits and also they adjust the capital employed, which I say there are reasons why they do that. And I made a reference to some of the adjustments which we do. So I think unless anybody has a question, and we went through that, I even added some comments here explaining what it is, and we went through that and were able to solve the question and found the value that was added economically was this before time caught us on what we're doing. So we did that, and I shared the Excel. You check it out. I think if you have already checked it out, then you may notice if you have any other question which could relate to that, then you could ask. If there is no question, as you know, the examiner has the question, so we can focus on the examiner and see what so far has examiner done or has been able to touch on this area and in what context. So we went through all that, and there are common adjustments which I listed here. I said you could find it also in the open tuition and listed there, which we went through explaining some of the reasons why it goes through that, because it is called an economic value added, meaning it adapts to the economic issues. So there is adjustments which are done on the accounting profit to make the profit be adjusted to what we can now view as economic terms. So unless there is any question, if there isn't, then I'd wish to go to the past paper and check some question which I could use. I had seen a question last time which had carried like 18 marks. That is November. So I prefer to check into that one because it had a good amount of marks. Probably it has something unique. I could easily find out from it. So there was a question which carried like 18 marks in November. So we said there are adjustments which are done, unless there is anybody who has a question on it. And we did a demo here first to just make sure we get the baby steps, or we start with the example to give us the baby steps first, and then we go to the past paper where there is now a question that relates to that. So unless there is a question on it, if there isn't, we can proceed ahead. As you know, we have a lot to do. My target is to finish economic value added and probably explain something on value-based management, which is more theoretically, as per the concept is explained more theoretically, and then or it is emphasizing more on what we are doing, which is called value-based, and then I go to transfer pricing. If all goes well, I intend to clinch or try to cover also the transfer pricing in the process of not entirely, or maybe just to give an intro or something to do question on it, and then of course look forward towards finishing it if it's time will not allow me, maybe in the next session. And after that, we go to what is called strategic. We go to non-financial, like balance scorecard, the BCGs, the Fizamon block, and all those building one block, benchmarking. All those are more like theoretical kind of issues with the interpretation required maybe for that, and probably in correspondence of the classes as we try also to push the class. If we finish this, of course, we'll do some of the units also in the class are over here, because as I said, there's a lot to be done. So usually time in the class is allocated for the class is always a big deal, of which cannot always make you finish whatever we want to do. So anyway, if there's no question, I would prefer to move ahead and go to the past paper. Question: on the Excel, because last time we did it and the time was actually pushing us so hard. So we had to wrap it up and say the issue of that. So if you don't have a question, I would want to go to the past paper and check some past paper issues and deal with it. Okay. So no question. I think we can jump to November unless you have another question. I want to go to November and read it out. And then after that, we cross-check it and see how we can handle it. And then after that, we, of course, would have an idea of how it is or how it can be set. And of course, the more practice you do, of course, the better you will have more knowledge on it. So you also need to do practice on your own, because whatever is done here is not the entire, will not be the entire thing that we could cover, of course, but we try as much as we can to do what we could do. We have other things, of course, that depend on the students. Also, you have to do a lot of practice on your own to make sure you get the details. If you need notes, I can share with you and all those cases. I have already shared some. So basically, you may have enough information that you may relate to. If you need more, I think I'll be around. So anyway, let's go to November, just as time is not on our side. I think I was checking, I had opened the PDF for it. This is April. Let me skim through quickly, April. How about if I just search November? November, there is a good question there. It carried like 18 marks. So we can use it, and then I move ahead to, because I try as much as I do an example, I try to get a past paper to of course to complement what I've done. The example, of course, may be not similar as a past paper. Past paper is set mostly with intents, and it has that is not searching. I don't know why. Maybe I typed wrongly or something, but let me just search manually. I could go to that area and get it where it is, because I think maybe I typed here. I think it's this one. It's December, not November. That's why it wasn't bringing the paper. So no, December, as it is mentioned in the paper. So for December, we could check it out. The question I had noticed, which carried some good marks, was this 18 marks. 18 marks is good marks, which somebody could, of course, start with from that. Performance questions are always, doable if you get to practice and also have the knowledge. As you may notice, is merely doing an evaluation of what has been done. It's like coming and reviewing and assessing what has been done. So this is a question. It was about calculate the economic value added of Neptune's and Venus consultancy for the year, 2021 and 2022, 2020 and 2021. So that's the question. Now we could, or required, that is what is required. And now let's go and get the real question, its body or the body of the question, to see how we can use it to answer those cases that have been, of course, put forward to us. So to answer that, let's read through this. Neptune's and Venus Consult Limited is a firm legally registered in Rwanda to operate different research-related activities. The following is summarized statement of profit and loss for the year ended 2020 and 2021 in its respective statement of financial position as at 2020 and 2021. So there is Neptune, and then there is Venus Consult. Statement of profit or loss for the year ended 2021. There's revenues.
Which paper is this?
December 2022. December 2022. If you are checking, is December 2022. I think probably it is attached at the back of your books. You could get it, and then of course use it. You have seen it?
Yes.
Okay. So as I was continuing, there is a statement of profit or loss, which is given there. There is cost of sales. There is, of course, the revenues, cost of sales, expenses of respective years, operating expenses, admin expenses, other expenses, then the total is equal to that. As you may notice, we have profit before interest, amortization, and taxes, before interest, depreciation, and amortization and taxes, which is given there. There is a finance cost, then there is a net profit, there is a taxes, which is 30%. Net profit is given as such. Then we have, of course, net profit after tax given in terms of that. And then they have, say, PBIT is profit before interest and taxes. And of course, which is also reflected up there. And the other one is profit before depreciation, interest, depreciation, amortization, and taxes. Now, you have also been provided with the following summary of the balances as at 1st of January. There's the details, then there is a balance, there's a 2021 as at 1st of January 2021. We have that as at 1st of January 2020. We have the allowances for doubtful debts, total equity, and then we have total, of course, debts as given as such, which total up to what is called total plus debt, which is similar to what we call probably capital employed if it doesn't have the current. Then there's the allowances for the doubtful debts as per the period of the end of the year, and of course, for the respective years, we have the 6 million and 4.5 on that case. Additional information. So there is additional one. The following is a breakdown of expenses for the periods ended 31st of December 2020 and the 2021. So you have 2020 and 2021. There is the breakdown of the other expenses. I think this affects the other expense. As you may see up there, it means it's affecting other expense. So we'll have to check other expense that are saying there's a breakdown of what it is made of. It is made up of these components, and we'll cross-check that to verify. If you check that, it means it is connected to other expenses. As they are saying, other expenses is made up of provision for court fees, and then allowances for inventories, and then the third one is made up of the miscellaneous, other miscellaneous cash expenses. I was trying to admit somebody here. Anyway, so that's it. Number two, there is a Neptune and Venus Consult has an ongoing research project KG, whose cost amounting to a franc of 1 million has been incurred in 2020 and 2021. So the element here is there is a research here, and the expense in the respective years of the profit, the profit or loss for the period, as external auditors advise that the company that these research projects cost do not meet the criteria for them to be capitalized. That's it for that. Neptune and Venus Consult have been engaged in research and development of a project of new product development of a local company. The development product was ready for sale on 1st of January 2020. The market research revealed that the product has been received well, and it has high demand on the market. Due to the current innovation and technology, the product is expected to last for 2 years on the market, and the company did not expect any sale. The company did not expect any sale thereafter. Did not expect any sale thereafter. The total cost incurred to this project by Neptune and Venus Consult Limited before the product is ready for the market was a franc of 30 million, as you may see there. The Neptune and Venus Consult Limited have not made any provisions for deferred taxes. And that's what we have there. Then number 5, consider the following tax rates, cost of debt and capital for 2020 and 2021. There is a details, there is pre-tax cost of debt, 8%, and pre-tax cost of debt in 2020 and 21, 21 is 8%, and 2020 is 8% respectively. Cost of equity is 15 and 13 as per the respective years, and tax rate is 30 for the respective years. So that's what we have. And then we have calculate the economic value added, of Neptune and Venus for the year ended, for the year 2020 and 2021. You get 18 marks for that, and you of course, graduate. After you get that, you get more from other areas and you move on. So anyway, the idea is here, we are supposed to use economic value added, which is what we need to do the analysis here, of course, with the adjustment relating to it in one way or another. So I tried to copy paste here. I think before we met, I had tried to make it appear here, which I think I kind of successfully did that because I wanted it to appear here. But let me just make sure it is properly well catered for. So that is these are of course what we have here. So anyway, the question is here. So what we need is to just have it now solved, and then after that, of course, we'll send the issue. I think these are calculated. Let me put double lines with the calculated values. There are posted values and calculated. I think this one is a calculated value inside it, and this one is a finance cost profit before taxes. This one is a computed value probably in it. Is it true? Profit before interest and taxes is equal to that. I think the profit, of course, has to be calculated. It's never posted there. Taxes is there. So profit there also has to be calculated for the purpose of this. So I want to highlight that. And then we have, of course, these details respectively, as I could maybe put some double lines to effectively put it in a proper way, maybe something like that. So we have they give us the details of allowance. This is what we have here. So we'll of course have that. You could also check in your paper, because if it is similar to what I've posted here, unless I missed out anything, but this is what we have here. So we have all that, and we have some totals here, which relates to those figures there. So anyway, that's what we have as it is. And we have some additional information. As you may notice, there is additional information, which should be 1. I think this should be 1. This is 2. And then there is, of course, others also as we move to also other cases. There is 3, there is 4, there is 5. You need to know what each additional information is talking about. And that's what it is. Like this one is on deferred tax issues. This one is on, of course, the capital structure scenario that you may need to use. So we have all that. The capital structure issue that you may need to use, which is said to be there, is on deferred tax provision. And we have also, this is on research and development. The underlying issue there is that a case. And then here, this is also on still research and issues which have been incurred, and the auditors' policies, which we need to compare with what we have. And then there's the breakdown of course, the operating, they say it is other expense. So the other expense here, which is of course given here, this here is said to be breakdown is that down there.
Rounded to the nearest 1,000.
Yes, I rounded off, but we can put the zeros back, no really problem. I think we can just put the zeros back and put it because I can easily go back there and get it. I think I did the round off when I was pasting it. I decided to round off some, but it is those figures. Let me bring them. I could just maybe bring them also. One is 120. Thank you for that. I think I could have, I rounded off those data as I posted them there. So anyway, so these are the data that we have there. So if you bring just a minute, where here, okay. So I rounded off. Let me check what the real figures were before I start to do. I think the first one is 120, 180, and then 7 to 50, and then 7 to 50 and 200. That is what it is there. So I could just put there. This is 100. If you put, let's remove some zeros here because I want them to be in full the way they are here. I could easily make an error because here it removed some data like 200. Oh, there is a point here. Okay, it's okay. There is a point. I thought maybe it removed there. So there's a point there. So it is okay. We can just add the 3 zeros back and make it be as it is. 1, 2, 3. And we have also this 1, 2, 3. And we have also this, put 200 instead. And that should be equal. If you sum up that, should be equal to what we have there. I think it has picked plus the year, which I don't think it makes sense for that case. So similarly, this would be the case here. So here, I think if you go back to the PDF, it tells you it is 98,202 in thousands and 1496. So it is 1496, 14,960. So this is okay. Could put just 3 zeros back and makes it that way. I think I put more than required. And then this is, of course, 3 zeros back, and you have it that way. And this is the 3 zeros, and you have it that. So anyway, which should be reconciling with what is up here. Should be reconciling with what is up here. I think this one doesn't. It had extra zero, I think. So that makes it that way, is it? No, it's not that way. I think I could check again. It is 98, 202, and then 14,960, 14,960, 14,960. So that's what we have there. This is 14,960. This is 98. Oh, here. It's supposed to be with an extra zero. So it's okay now. So that's what we have. And that gives us the breakdown of all those data here with respectively the header. The header is respectively as which are those ones. And in franc as it is. So we need to start to, of course, do the adjustments. Now we know Eva. We remember Eva as it is. There are some adjustments we usually do. If you've forgotten, the adjustments are still here that we usually will go through. These are sort of adjustments here. These are some of the adjustments we'll need to go through. And that is what I need to also, yes?
What about the above tables where the allowances also needed to bring back at the zeros because it's also here?
The allowances. Okay, we'll bring back the zeros. You're correct about that. Bring back the zeros as I remove the zeros. So we can just put the 3 zeros there. And I think also this one here will require 1, 2, 3. And this one will require 1, 2, 3. Thank you for that. And this will require also 1, 2, 3. So that's it for that. And this
why are we adding the zeros?
Because everything there is in zeros. So when I was typing, I removed the zeros. So I just want to make sure somebody reminded me. I just wanted to make sure they are as it is there, because I copy pasted and removed the zeros. So I just want to make sure it is as it is there. It's not a problem as such. It's just to make sure that we are on the same units as we are thought it should be, and make sure that we have.
Don't make an error.
So to avoid maybe probably making any errors that could exist from that. So that's why I'm trying to make sure that it is brought back. So that this one here is also zeros, and then this one here are zeros. So
even the statement.
The statement.
This the lower what? From the finance cost.
This one is in thousands.
Down from the finance cost and the net profit.
Let me check. Is it, am I doing correct issue? Let me check again. Just a minute. Give me a minute.
From the finance cost, the net profit.
They are supposed to be in thousands actually.
Yeah.
The ones which are other expenses are supposed to be in thousands. Even the statement up there are in thousands. But I removed
beginning from the finance cost. Beginning from the finance cost.
From the finance cost. Let me check that. From the finance cost. It's me who did an error when I was pasting it. I removed too many zeros. Yes. Everything is thousands, by the way. So everything is in thousands. For me, I removed and made them millions.
Yeah.
That was my error.
From the finance cost going down.
From finance cost, they are supposed to have also 3 zeros back. I did not post those 3 zeros. And even here, they're supposed to have the 3 zeros back. And these ones here have 3 zeros back, which is supposed to be that way. And here, 1, 2, 3, all of those have 3 zeros. And even including these, I think this one has also the 3 zeros, 1, 2, 3. So they have the 3 zeros, and I need to make sure they are all in uniform. But the statements are also in thousands. Don't forget that everything is in. Even this one here is in thousands. This one here, it is franc, and it is in thousands. So it is you who did an error. I reduced too many. I reduced some zeros later. I think I thought they are supposed to be removed when I was pasting it, but it should be that way. Hopefully this one is correct, or it has 6. I think this is 6 million.
Yeah.
So this one is 6 million. 1, 2, 3. So this is 6 million, and this is 4.5. So it's just to make sure you could have. If you have the paper, you can feel free to check. Just making sure. We are just trying to make sure that we don't have any errors we carry as we solve it, because it will bring some problems when you are trying to get the final values. We'll deduct the issues. So all the figures, I hope they are correct. You could check in the past paper to confirm.
From the taxes, you did not correct as you go up.
Taxes are having zeros also. Okay, so taxes, all I need is to add the 3 zeros. The 3 zeros up here, the taxes have also 3 zeros there. So just to make sure everything is okay, that will be with the 3 zeros inside it. And I hope this has also the 3 zeros inside it. So I add some 3 zeros on this 1, 2, 3. So it should be that way.
Okay.
So hopefully it's so correct. And I think you may know that if you check all the data, they should be now intactly correct, including that should give you that. And the rest here, this is total expenses, meaning it is 61 million, meaning if you sum up that, should give you 61. And similarly, if you sum this, should give you that. And then you have profit before issues there, that is 366 million or something like that. So if you subtract this, should be able to give you that. And similarly, on the other side, you should get for that. So the same applies also the finance cost after you deduct it. You should be able to give you these minus that. If it is, unless otherwise, it should be able to give you that, and you get your issues. Also, the taxes after you subtract, you should be able to get those figures, which is, of course, we'll take these minus the taxes, and you get those the figures. So that's why we are trying to make sure they are in the same values. And of course, these ones here are okay as it is, and then we have that. So anyway, hopefully it's okay. If it's okay, then the concept will be, the values will be accurate. Of course, even if it has some issues, we'll make sure that the concept is correct. Now, the idea is this. We need to start by, of course, as we know, the first thing, we have 2 components here. We need to take net profit after tax, and we need to do a plus or minus issue. So we need to do plus or minus, and the plus or minus is basically to say we're going to either add or we are going to subtract the issue. So make sure you get that. So we need to do plus or minus. Of course, the adjustments, some of them could be plus, some of them could be deducted. And then after that, we minus capital employed. Capital employed, but capital employed in money form. So you will convert it to cost by in value, which you multiply by wachacha later on. But this capital employed is supposed to be adjusted also, because we usually adjust as it is. So that's what we need to do, and that's what I'm targeting to do for that case. So we can start by, of course, let's start with the profit after tax. Let's start with this slide here first, and then we go to the capital employed. I think that's better. So let's do the calculations. We have the calculations we need to do. Adjustments we need to do. Adjustments of NOPAT, net operating profit after tax. So we have years 2021, 2022. Those are the years, is it? Those are the years. So we have what is called, as you may notice, there are 2 approaches which I said you could use. You could start with the operating profit, or as you may notice here, last time I provided an example here showing you could, it is not always you can start with also this, and you can start with also this. They give the same answers. It depends. Like in that question, there's a possibility of starting with this profit and doing the interest and non-cash issues and dealing with that. So it depends with how you take it, and that's the case. So it's possible for us to do adjustment on either profit after tax, or you can do adjustment on operating profit that is, of course, before tax. So it's possible to do that on operating profit. I'll do both to show that it's possible to view from any angle. So let's start with where there could be more details. Let's start with operating profit. We can start with operating profit and fix the adjustment. So it depends again with how you view it. But as long as you have the both profits and all enough details, then you can use what it is. Like in this case, the operating profit I'm talking what is mentioned here, profit before depreciation, before interest, before depreciation, amortization, and taxes, which is that one there. So that will be 360 million, and then there is that one, which is that. Remember, all the figures are in thousands, so we presume all that we're doing is in thousands, as you may notice that. So everything is in thousands, and even here, or everything here will be in the thousands for that case. So we have that. Now we need to do some adjustments, and adjustments here will be adding and minusing some, most times adjustment can be plus or minus. So that's why we put it as such. But let's focus on it and see. So we need to do adjustments. So there are some adjustments we may need to do. Adjustments. This has come too long. Adjustments. So we have adjustments that I need to do. Like that. So the adjustments we have will be related to that. I don't know why this one is coming. I need to delay. I don't need this story. So that's the case. Now, from this case, we have adjustments. Now, you have seen the adjustments, how to do the adjustments. You get them from additional information, because additional information gives you the breakdown of some of the issues. Like here, we have research and development, number 2. And even we have here non-cash issues, which will come, we'll check here, provision of fees and all those cases. We need to deal with that. Let me pick those that I can pick directly from here. We have Neptune. There is a research here. They say Neptune and Venus Consult has an ongoing research project, which is called GK, whose cost amounting to $1 million has been incurred in both 2020 and 2021. And expense.
Excuse me, sir.
Yes.
Why is it that in this case we have started with the net profit before tax, yet you are using the to no part, which is a net operating profit after tax?
I've said I'll do both sides to show, because you see, I'm going to do both. I'm going to do both to show the issue. I said I'll do both to show the issue, because one of the issues, as you know, in professional exams, there is always the dynamics of things changing here and there, or the examiner trying to twist the issues. So it's always the idea the lecturer has to provide all the dynamics. So I'm going to do both. I'm going to do both to show. I will do this first, then I do the second one here to show they should give the same answer. As I said again here, you see, last time I was doing here, and I think when I was doing here, something was not coming clear, but I did it later on before I sent Excel. I remembered what I should do, and it gave the same. So you could start with this, and you could start with that. So my intention here is to give both dynamics, because the idea here is to show different dynamics. You know, in professional exam, there is that issue where the examiner always tries to beat you if you don't know the other direction. So it's better to give both sides and leave for you to choose, or leave for you to understand, not to choose, for you to know when to work with what based on what information you have. That is what I need to provide for you. So I'll start with that, and then I show the other side. Don't worry about that. I'm going to show both sides, and we see. Okay, so I was saying here, I'm going to deal with the research as it is here. Research, as you may notice, of those who remember here, maybe if you've forgotten, these are the adjustments we'll do here. This one's here. Let me bring them here before we go to the details here. These are the adjustments that you need to make. I could paste them here. Hey, come on, it went really badly. I think it really took some spaces here, but I don't know why. Let me see. But I thought it's it is wrapped up. So basically, it means it's wrapped up. So I think I'll of course try to maybe make a text wrap also for that. Anyway, the adjustments we have are already there. So what I needed to show is just how we could deal with that and then see how it can be done in the process of trying to fix that. Let me see if it will be okay or it will bring a big problem. No, it will not work there. I'll just post it down there later because it is an under text wrap for that case. So anyway, this is the case. So what I want to follow is that idea, and the adjustments, as I said, I've pasted here, which you could see that from your issue later on, and then you may notice how it is from that. I could paste them down here so that they don't interfere with what I'm doing. Maybe I could paste as just values, maybe to avoid that, which will come as such. So those are some of the adjustments. Expenditure, we said expenditure, non-cash expenses, provisions, goodwill written off, depreciations, interest, and all that. And remember, we said expenditure, which is of course on research and all those should be added in form of that. So if you do that, then you should know that's my intentions, or to try to make sure we get what it is. So from there, let me try to use that. So first thing, let me start with the expenditure, because expenditure, I can easily find it in note number 2. Note number 2 says that Neptune and Venus Consort Limited has an ongoing research which is under Project GK, whose cost amounting to 1 million has been incurred in 2020, in both 2020 and 2021, and expense in their respective statement of profit, as you may see there in respective statement of profit, and that means we need to adjust that. So it has been adjusted in respective statement of profit or loss for the respective 2 years, which is of course 2020 and 2021. So what we need here is that we know that research is supposed to be added back. The auditor said it's not supposed to be capitalized, but here we are not dealing with auditor concept. We are dealing with economic value added. So we'll have research, and research, just as I said, research, which will be added here. So the research we add here 1,000, and because it is affecting both years, then you have also to factor it here, and it's the same figure, which will be that. You remove the 3 zeros, and you have it as such. Okay, next is we need to check and find out other issues that we could also adjust. There is also non-cash expenses that are also factored in, like those provisions and the rest of those that we have to deal with, as you may notice in the form of what we have for that case. So let's try to deal with it. Now there is this, let me go back here to note 1. In fact, I should have maybe started with that to follow systematically, but no problem. I thought this one is easy to pick. Here, we have non-cash expenses. Now, as you may notice, we always add non-cash expenses. As I was following this order, there's non-cash expenses. Let me keep with that. So non-cash expenses, do we have them? Yes, we have them under other expenses. So you have here the non-cash expenses. I need to pick them wherever they are and include them here. What are those non-cash expenses? They are here. Provision. Provision is not a cash. Provision is not a cash. And allowance. Allowances are not cash issues as it is for that case. So we have to know those are not cash. They are basically some amount you put aside for maybe cushioning yourself or trying to prepare yourself for any eventualities. So one of them is this provision. Provision in court is, of course, supposed to be added back, which is that 120. Another part which is non-cash is this one here, or another additional element is that one there. So you add those ones, they give you what it is for that. This will be similarly happen to this, and this will also happen to this, sorry. So those are the issues. Sorry, I picked the wrong data here. I think I should pick from 41. So that is what we have there. as a part of our non-cash expenses, which are relating to that period. Unless there's any question there. So this is found in note number 1, and this one is found in note number 2, just to make some references which could assist maybe in the future for revision purposes for that case. Now, apart from that, we are supposed also to because as far as I'm concerned, we have also some other issues we need to adjust that we may check and find them out, and also keep up adjusting them so that we can easily get what it is as we go on. Now, what other adjustments can we also do? Now, based on what we have, we have adjusted on cash issues, but we usually presume the taxes have been paid. So we took before tax, so less tax as we presume it is a cash expenses, so which is taken there. So the tax, as you may check here, the tax, it's already those figures that we have there, but
Not extend the narrative for us to read properly.
which one?
Extend the narrative space. No. The
Which one?
column space, like a provision for some other big.
Provision for, okay, just give me a minute. Okay, so
Yes.
we picked that, we picked those two. I think it's okay now.
Yes, it's okay now.
Okay, I was saying here, again, we'll have to deal with the tax, with less tax, because I picked before. Somebody's asking a question. Miscellaneous expenses is not added back. As long as it is not mentioned provision, because let's think this way. Non-cash expenses. Non-cash expenses are expenses that are estimates. Let me put it that way. Are expenses that are estimates, or what can we say another name? I think estimate is the better word. Estimates that you provide, because accountants are supposed to provide, from what I know from those who study accountants are supposed to be proactive, so they always could use estimation and provide for that. So what the terminologies represent them? Non-cash expenses, the common ones are things like provisions. These ones here, these are, in fact, they should combine these. Non-cash expenses are things like depreciation, provisions, allowances. Those are the common terms. So miscellaneous is not mentioned as a provision. We presume it has been paid. So allowances are things you set aside for future. Things like also provision you set aside with the view that in the future there is something which could likely happen and you may need to deal with it. So that's what I can say. Allowances, and that's why I picked that. I can't pick miscellaneous because based on the adjustments we do non-cash. Now, most of you do corporate finance, and since you do corporate finance, it basically means that you have an idea what we talk about non-cash expenses, things like provisions, or you do reporting where we do, we usually cover what is called adjustment on the profit before taxes. And the reason we do that is to fix mostly non-cash issues, is it? And one of the non-cash issues are usually provisions, depreciations, allowances, because allowances are simply amount set aside, but it's not cash. So that's what I need to tell you from that scenario. Okay, if that is okay with you, and then I'll try to move on, and then we see what it is. Unless there is anybody who has a question. If you don't have a question, you can move ahead and see what we have from that case. No question. Okay. If there is no question, I think we can move ahead and try to fix the other issues that we have from that area. Now, I've said there is a non-cash expenses, which I've listed them. And apart from that, we also have other issues that we need to factor in. One of them will have to less tax, but tax, I need to check out and find out what is the cash that was paid on tax, sorry, because I'm not really sure if it is this one only. I'll have to check if there is any balances to find out what it is for that. So this one I may need to do maybe probably some working on it to get what was really paid, because the tax which is here is on accrual basis. So I can't really charge that or really focus on it as a basis of rate. So I may do a working for that, but there are other things which I could post. There are other things which I could post, and those are also what I need to post and deal with them from here. Now, apart from that, we need to less. We need to less, as you may check, we need to less amortization. We need to less amortization from previous years. There is amortization that we need to less for previous years' expenses, and especially amortization that is on product development. So we have, as you may notice, I have noticed that there is an amortization which was done on a previous period. So what I can say is we have amortization. Amortization, I think, is it 2 M's? Amortization. My English is, I hope it is correct. Amortization on prior years or previous years and this one mostly it is based on product development. Because why product development? Product development is increasing resources. Remember, research and development are supposed to be added back. So if they were reduced, we were supposed to get how to add them back for that case. So this is what I'll do as from that case, and then I deal with that. So let's find out what those are, and then we deal with it from that area. So if you check again, we have amortization, which has been, of course, as we did our analysis, we noticed that we have all the data that relates to that, but there is something which they said, and we need to find out how to fix that. And that, I hope you have analyzed all your additional informations. So there is something which they said about amortization, and I need to fix that and get what is the value that relates to that. And the amortization, of course, is covering between certain years, which we need to deal with it. So it is mentioned that, as you may notice, they said that in note number 3, Neptune and Venus Consult have engaged in research and development of the project of a new product of the local company. The product, the developed product was ready for sale on 1st of January 2020. The market research revealed that the product had been received well, and it has high demand on the market. Due to the current situation and technology, it is expected to last for 2 years on the market. And the company did not expect any sale thereafter. The total cost incurred by Neptune and Venus Consult limited before before the product is ready was equals to that 30 million. And they say that, of course, as you may notice, as it is part of what it is for that case. So there is what has happened, and they are saying that there is a cost which incurred over that period. Since they say that Neptune and Venus engage in research and development, and it started from January. The market research revealed that the product has been received well. So what it is here, it is that there is a cost which they incurred in terms of this for the 2 years, and they amortized it for the period that we have up to date. So what we need to do is, it is said for 2 years. Anybody who is wondering where I got the 2 years is mentioned here. So we'll use an average. We'll just average it and share it, and we'll say it is 30. I think 31, 2, 3. Divide by 2 because it's for 2 years. And we have to add it back because it is improving the economic welfare of the company as it is. So that's what I need to do. So generally what I've done, I've taken the 30 and presumed that it is equal over the periods of 2 years. And then I divided by 2 and I got, that's what it gives me as to share equally within the 2 years. And this is in note number, I could write the note here. Let me cut this here and put this side. Because here I was writing the note. If you check, it is a note number 3. I think it's note number 3 for that case. Unless you have any issue on that, it is extracted from this note here, which is relating to that. So I'll fix that. And I think unless there's any question, if there isn't, we can go on and check also the other issues that we need to adjust corresponding to what we have. Question? Research and development is supposed to be added.
Divided by 2.
Why reduce?
Yeah?
Why to reduce this cost?
Why
Yet
reduce?
it is, yes, yet it is
Yes, this,
hard to.
The idea is this. First of all, why did I divide by 2? Why did I divide by 2? And in fact, I'm supposed to less. So I'm supposed to put here a negative. I'm supposed to put here a negative. Forgot that. So why did I divide by 2? Let me answer that. I divided by 2 because they said it is 2 years here. They have mentioned here. They have said, if you read again, let's start with this sentence here. There is a clear sentence here. I don't know if I could paste it somewhere, but there's a clear sentence starting from this area here, which says that the market research revealed that the product has been received well, and it has high demand on the market. Now, due to invention and technology, the product is expected to last for how many years? 2 years on the market. And the company did not expect any sale thereafter. So the 2 years is where I got the 2, and the total cost incurred to this project by Neptune and Venus consult before the product is ready for sale is equals to that amount. So the idea is, that is what we have, they say is equals to this 30 million. So the idea is, what do we need to do with it? Because it's a part of what they're saying. It is engaged in this idea of a new product that is developed and to be, of course, ready for use and to be let into that. So why are we expensing it? Okay. No. The idea is somebody saying it should be added. Somebody saying should be added. Okay, I tend to differ by that because they are saying here, if you may check. Let's go back here. They said that this is after the 2 years on the market, the company did not expect to sell any. And when was it ready? They say that Venus and Neptune and Venus Consult had been engaged in a research and development of a project, of a new product, development in a product development of in the local company. The developed product was ready for sale on 1st of January. 1st of January, it was ready for sale. The market research revealed that the product has been received well and it has high demand on the market. Due to the current situation in technology, the product is expected to last 2 years in the market. And it did not expect any, they did not expect any sale. They did not expect any sale thereafter. So what does that tell you? It tells you that despite the fact that the product is supposed to go for 2 years, after 2 years, it will not be viable. It's like maybe a phone. You have developed something like COVID. COVID came around and the people did research and development, and then there are some things which are not, we can't buy them now. I think people don't buy masks anymore. Is it true? People don't buy masks anymore. If they do, it's for preference issues. But you see, if somebody had set such amount aside, then it's supposed to be expensed. Why is it supposed to be expensed? Because they are saying that by the period which it is there, it is not going to be, it's supposed to be expensed because it is not going to improve any economic values. The reason I deducted is because it is going to be useless after 2 years. because I say it will last 2 years, meaning year one, it lose value. Year two, it lose value. So does it add any economic benefit? No. In the 2 years, it is supposed to be 0. So this is why I'm reducing 15 gone in first year and then 15 gone in the second year. Why? Again, because the research and development is not going to add any value. It is losing value rather in year one and losing value in year two. And what is year one? 2020. And what is year two? 2021. We only add a research and development that is going to be, that we are expecting, that is going to make changes in the economic factors after, improve our or improve the economic base in period to come in the future. But this one, in the future, nobody needs it. So it means today it is losing value. That's why I deducted it. Hope I made sense. I hope I've answered your question. It has made sense. Have I answered your question? The reason why I'm reducing it and the reason why I'm dividing it by 2.
Yes, sir.
Okay, good. If that is the case, then the next issue is for me. I need to move to also check any other issue that relates to apart from those additionals that we have there. Now, if you check, as you may notice, we have, of course, we have to go through all the other cases and see if we could adjust anything that relates to that. Now, one of the things I say, taxes, I'll come and deal with it. But if you check, we have also doubtful debts. Doubtful debts, I can't forget about it because it's mentioned here. Here is something that I need to check. Doubtful debts, of course, is usually a provision. So I need to check that, how it is moving. I'm assuming that it is not included in this note 1 here, because note 1 is provision and allowance here. So of course it is not included. So I need to check this doubtful debts and how it is moving. Now, for those who know, doubtful debt is usually an uncash also element. Doubtful debts. Doubtful debts, actually, it is usually referred to as provision or allowance. Allowance and provisions, I think they almost mean the same issue. The difference could be very, significant for that. So there's provision on doubtful debts, because you could see some people call it allowance, some people call it provisions. So provisions on doubtful debts, meaning that they could maybe merely have the same meaning. So the doubtful debts, as you may notice, there is a change which took place. For those who notice, this is at the beginning of the year, this is at the end of the year. This was what was realized during the year, and this was what was, of course, realized at the end of the year, which is that. So, of course, usually provision for bad debts, as you may notice, those who usually want to use a T account, you notice what it means. This was actually the opening balance, and this was the closing balance. So it meant that provision for bad doubtful debts increased. And when it increases, it is because the difference between these, and of course that which created that difference. And the difference is this 1.5. So if it increases, what happened? If it increases, what happened? It means it was expensed. So if it was expensed, because I think you have the knowledge from foundation, here it is accounting meeting economical concept. So, which is good for you because all of you are also accounting students or reporting students in that category. So, you know how we treat provision on, of course, doubtful debts. Usually, when it increases, it behaves as an expense, or it's treated as an expense. When it reduces, it behaves as an income. So, my adjustment is based on what was done previously. So previously, it means it was this figure here. If you do a T account, those who love T account, it means this is how it came in. It came in as an opening balance most times. Of course, provision for bad debts, I think, is usually on the credit side. I've just done roughly, but it's usually on the credit side here. So this should be the opposite on this side, and this should be actually on this other side, because it is the one which is closing the year. So it should be something like that. But anyway, the bottom line is there is a difference which should it increased, which is credited here and debited to the profit and loss. So it became an expense, and therefore to fix it here, I need to add it, and to add it, I'll add 1,500. I remove the zeros. Is it after zeros? I think it is. I'm supposed to add the way it is because this one is in thousands. Is it in thousands? Check in the paper. Is it in thousands? Is it in thousands?
3 zeros.
Yeah?
Yes, in thousands.
Then if it is in thousands,
3 zeros remain.
3 zeros remain.
Yes.
If it is in thousands, then the 3 zeros remain. Yeah. If it is in thousands, because everything there was in thousands, I could check to confirm just it is, yeah, this says in thousands. I think somebody made an error there somewhere because it will be one of the biggest figures ever, and it is just a mere expense. You know, it is in thousands. Yeah, you're correct. It is in thousands. So the 3 zeros should remain. Somebody did an error there. It should be taking away the 3 zeros. Because I don't believe it should be that big figure. If it's that big figure, it looks very awkward. Looks very awkward. I was checking the question. So anyway, my idea is to pass the concept. So this should be that way. Hopefully, whoever was doing the marking noticed that error. But I believe it should be less than that. It's too big. It's even bigger than this profit. It is a big figure deducted here. But anyway, if that is the case, I really don't mind. We add it and we move ahead.
A question.
Now, that is what will happen. Yes.
I have a question, sir.
Yes, please.
How are you getting a provision for doubtful debt of 1.5 M?
It is the balancing figure. I think from this comes from our knowledge of when we handle what is called, the foundation accounting. We always go through something called provisions for bad debt. So provision for bad debts, if you are to prepare now that since you are asking, I could easily provide even the way it is. So the provision for bad debts, one of the things, as I know, provision for bad debts is always changes. Any provision changes, especially a provision that is carried to the future. And provisions is amount set aside. So it is subject for change, like this here. So this is like provision for bad debts, provision for bad debts. So when it changes, that is how it affects the income statement. Provision for bad debts. On bad debts, we always would debit this side if it is there. And of course, we have, usually it's supposed to start on this side because it's a credit balance by nature. So first of all, let me delete this. How did we calculate that? Of course, this is the closing balance. The 6 million is the closing balance. And this side is supposed to be the opening balance, which is given here. If you are wondering where it is said to be January, which happens to be that figure. As per the January, they have said that is for the January 2021. So I hope you get me. So when they opened the year, that is what they had. As the year was closing, they had as 31st December 2020. Is it one? I hope I'm putting the right here. Yeah, they had that. I think I put on the wrong side. Yeah, it's 2021. It's okay. I was thinking I put on 2020. So this is what they had as opening. This is what they had as closing. So you notice that since you do have to close the account, there is changes. And assets, whenever they change, or liability whenever they change, the change is supposed to be accountable to or tracked in the income statement. So that's what I was trying to also explain before I even posted. And that's why I had even to do this. So it changed here, and it started here and changed to this. So of course, to show you that there is a difference, and that difference is between this 6 million and this one here. So it increased, in short. And when it increased, it is supposed to be posted to the profit and loss by crediting this account and debiting. It behaves like an expense. It is like an expense which you are supposed to set aside more amount. So it becomes 1.5, which is what I did. I think you understand. Yes.
The format
For the previous class in the format,
Yes.
you said that is the allowance for receivable.
Huh?
You add the for increase in allowance for receivable.
You add.
Mm.
Um,
In the
I said
format,
you add what? You add what? I didn't get you add what?
increase in allowance for receivables.
Yes.
Mm. In the
Yes.
decrease, you less.
Mm-hmm. So here it increased. That's why I've added. Now, to understand this, understand something. We do, this one is called adjustments. This is what I usually would say. Adjustments means you are fixing a previous record. You are fixing a previous record. Adjustment means fixing a previous record or a previous recording, prior recording. That's what adjustment means. So when I say add, don't just add because I said it. The idea should be, think about what happened previously. Like in this case, an increase in provision usually is expensed. A decrease in provision is what? Is deducted. Or it is treated as an income. Let me say that way. When it is increasing, we expense. When it is reducing, we account for it as an income. So here, if this increased, this provision here, if it increased, then we are supposed to know that previously they must have reduced it. So to adjust it, I'm supposed to add back. I think you get the point, huh?
Mm.
If you got the point, in 2021, in 2020, that's what happened. Now, in 20, this period, yes, please.
I think what is confusing him is that that word you have started with is less. I think that less shouldn't be there. You just use signs.
Oh, okay. Add stroke.
Yes.
Let me say this. If it is the writing, generally it is an assumption I took, but from the question it is add or less. Let's say that way, add or less.
Okay.
Or you should have told me it is what I've written there. I would have understood easily, because sometimes we give a general way, assuming that somebody would understand. But we're giving a general picture. Sometimes we just say plus or this, but reality is that when you're doing adjustments, it can be plus or minus there. So anyway, in 2020, this is 2020. In 2020, the opening is, of course, as they said, you could see here. The opening is the 5 million. The opening is 5 million. You bring it here. And they say it is this way here. So if that is the case, then you have to find out there. Of course, the previous opening was this one here. This was it, because this must be the previous opening. So there's a difference of that, and it seems not to appear there. It should appear this side. So there's a difference between this and this. And there's that, because this one where I picked it, it is continuous process. It is the same account. So this must be closing here, then it must be opening here. This must be also the same opening here. So don't ask where is the opening. The opening must be this one here, which of course was the closing here. So there's a difference of 500, and it appeared on this side, meaning it went to the profit and loss as an income because it decreased. So since it decreased, it means you saved. And when you saved, when it comes here, previously they added to the incomes. For you to deal with it, you need to subtract it, and you subtract it as such. And that's what I need to do. You subtract it as it is moving in an opposite direction. Anyway, unless there is any question on that, if there isn't, I can now deal with the taxes, and I'll have finished that adjustment. Okay, if there's no issue about that, let me do some small working on taxes. That was a working to show the movement of provision. I'll do it probably later better when I have time, because always there is a when you are sitting down, you can easily fix the things in detail properly as when you are in class session. So when I get the time, I'll of course fix it properly and show how it is. And explain some other issues why I did that to you. Tax. Now, taxes, I need to get what was the cash that was paid as tax. Remember, as you may remember, we said they use what is called cash up approach. They use what is called cash approach. So what I need here is for me to do the taxes and find what was the cash that was paid. Now, if you check properly, you notice that there is a tax which was charged in the statement of in the profit or loss, and then there's a tax which I need to find out, was it the one which was paid? Now, the easy way will be this. We know that we need to take away what is called, let's put the years here. This is 2021, and this is 2020. So here we have the reported tax here, which I can call it as the names. This is the 30% tax. So that tax here, if you bring it, I think if you run it down here, you'll get it is equals to that. That is the tax issues which we have. Now, if you come here, you need to less. You need to less, of course, there is some issues which are relating to that. And that is, of course, the issues which you have dealt with, that we need to fix them and find out if there was any cash that was paid, and that's what we need to have, and that's why I'm doing this working, to find what was the really cash that was paid in terms of that. So, in terms of what we have here, as you may notice, there is a add or less, I think is adding, add tax relief, because previously it was left, it was deducted, tax relief. The tax relief here, the tax relief. The tax relief here is, we have, as you may notice, 30%. I'll provide the formula when I post this. There's 30% that was deducted, not here, sorry. There's a tax relief that was charged. Now, the tax relief that was charged mainly to what we have as the interest. The interest here, if you check interest, because interest is usually allowable, so there's a tax which is charged on that. So this is a tax relief on interest. Tax relief, relief on interest. To explain that properly, tax relief on interest is what I'm trying to adjust here. Why am I doing that? Because we know usually they allow that expense. So this also will come from that area to be that figure, which is that. So what I did, I have simply taken 30% multiplied by interest. Interest, for example, is given in this year, it is 2 million. So you take that. The other previous year, they have given you the interest. The interest is this amount here. So you take 30%, it gives you 5 that. So if you deal with that, you get that figure there, and that is what we have as the cash that could be possibly have been paid on that basis, that it's related to that. I think if you add that here.
I have a question.
Yes, please.
I think tax relief should be 1 minus 0.3 times the interest.
Exactly. That is the tax relief, but we are now doing the opposite of what you are saying. We are adding the tax relief that was deducted, because you are saying exactly what we have, 1 minus what? You said 1 minus?
0.3, 40%.
Yes, meaning they deduct 0.3. So here we are doing the opposite, adding back that interest part that was deducted in form of that element. Why? Remember, again, if you remember very well, we said here, and the thing is here, add to the net profit after tax adjustment any tax relief treatment, which is what I'm doing. If you check, this is the idea which I'm trying to fix there. Why do they add back? They add back because the idea here is they are trying to make sure that they consider that there will be wachacha. Remember, wachacha reduces interest again. So if you reduce it 2 times, it will be doubling. So to reduce once, they reduce only in, to fix that, they add back what was reduced previously to fix that. Because if I take the way it is, it's like it is doubling, and that is the issue that we have from that case. Because if we check again, it is here. Add to the net profit after tax any tax relief. As they say, treat the debt as part of capital employed. Because it is already part of the capital employed, we assume that that finance cost is because of the debt. So we add it as it is from that case. I hope I've answered your question. So we add it, and why we add it? Because the idea is that we'll deal with it later under the wachacha. So I hope you got the point. So the tax that was actually paid will be this figure here. That is the cash tax that was paid. And that figure. Yes, please.
From those adjustments, you have seen that actually I have just shown it, that the tax relief is added back to the net profit. But now the tax relief, in this case, we have got the tax relief, we have added it to the tax, then we are deducting it from the adjustments.
You're correct about that. You're correct about that. Let me say something about this. Here, remember, I'm using profit that is there before they did the interest and all that. So usually, the same case I want to explain again. We have not deducted interest here. Remember, for us to get profit after tax, this is profit before tax. Profit after tax is this one here. So if you have profit after tax, because the reason why I'm doing the opposite is because I'm using profit before they did the interest and the other issues. So I'm doing the opposite because I'm dealing with this. I'm dealing with this. I think you get the point. I'm not dealing with this. I said I'll deal with this, and you'll see that. Because what you're saying is very correct. I don't need to argue that. Here they say after that. So to fix, I do the opposite, which is to less it. So I add it here, and then I less it in total. I hope you get the point. So here they add it. That's why I was showing this. So, but I am not at this profit after tax, which is too good for, is a good observation. You have done that. I am still dealing with profit before the taxes. So if it was to be added back, then the opposite to be true. I'm supposed to minus it. And that's why I added here for me to minus it. Okay, unless there is any other question, if I do that, then this gives me the adjusted. And if I do this, this gives me the adjusted, and that is the adjusted profit that was, this is the adjusted value of this figure here, which is, let me bring this down here, which is this figure here that you have there. Unless there is anybody with a question, if there isn't, that should be the figure that we have there. Question on that? Okay, if there's no question, then I need to go to this other side. This other side, yes?
Tax is removed.
Huh?
Tax.
Yes, tax is supposed to be deducted because it was before tax. So I need to deduct tax properly from that. And okay, let me show the other way. I was showing 2 ways. I think the problem is maybe you got used to this formula. This other formula can also be, there's another formula which can also be operating, or let me call it PBT. Let me give another formula. P DIT. I think the problem is maybe I did not give this version. Plus or minus adjustments which could happen also. Plus stroke minus could happen. And then after that, you do the adjustments. This also can work. I'm giving two versions. The adjustments and then minus adjusted capital employed. And then we multiply by wachacha. So that's what I need to tell you. You can also do this way and do some adjustments. So I've given you another dimension. So don't be stuck to this. Also, no, you can also do this way. But commonly we use this, and that's what I want to show you here now. I want to show the other version of that, which I will start with profit after tax. The profit after tax is this one here, because I said I'll show the both methods and fee. So here, profit after tax is also that figure that we have there. So I think if you drag it, it will give the other figures which are corresponding to that. Let's extend that and extend that. I hope it is the same as that, which is of course this and that. Let's do the adjustment and see. Will they give us the same? And they say what we have. So here you are going to add, again, it is just a matter of showing, so we don't need to go back. We've already gone through the interpretation. We'll add, of course, this 1,000 here and this 1,000 here. This one here, no problem about that. And we'll also add the non-cash elements, which are already there, those non-cash issues. We'll add them there, which is already, you have it there, and you have it here. So that will give us that. Then we also have, we could drag it down. Those ones are supposed to be, sorry, I think I did wrongly. I could just drag it like that and drag this down here. So we have it as such, which we can call simply non-cash expenses. And we have that. Now, when it comes to, of course, tax, I'll not focus on tax because the tax has already been deducted here. This is, remember, if I open this up, this is after tax. So now here, in this case, I need to add interest. I need to add the interest, but I'll add interest after tax component, which will be there after tax, which I need to factor in there and add it there. I'll come to that later. Let me fix the other ones first. I think I've removed that. I'll fix it better. Now, if you check there, we can, okay, let's fix it, no problem. We can fix it and see. So here, the interest, we take after tax issues there, and that is what we need to do. The tax relief, as somebody said, is one after, or one minus, T, which is, of course, the factor that we need to factor in. So let's do as you are previously claiming. So you take this, you multiply by 1 minus 0.3, and you close the brackets, and you have your figure there. And similarly, I think that will cross across here for the other one on this figure here. And that is what we have.
Can you repeat on how you compute interest after tax?
Interest after tax, as somebody had previously indicated, I'll take interest, and then I take brackets. I multiply, by the way, that interest. Let me call it I, small I, open, small I. I could use small I instead of big I. It looks like 1, like that, and then 1 minus T, which was what I did. And how did I compute that? It is 2 million, sorry, 2 million multiplied by 0.7. You get after tax issue there. And the other one is, I think, 1.8 or something, this one here, and then you take away the A factors which relate to that. That's what you do. I hope it is explained. Now, amortization, we're not going to, of course, the idea here is we're dealing with the things which are relating to those cases. And one of the issues is for amortization, of course, we presume that as it is, unless otherwise, we'll have to think if they deducted or not. I'll have to find out. But if you check provision for bad debts is an uncash element, I'll have to deal with that. So I can come here and add provision. Because for amortization, I need to find out did they deduct it entirely. Provisions on bad debts. Provisions on bad debts. Provisions on bad on debts. Let's say on debts. On debts. Provision on debts will have the similar aspect, which will be that, and then we'll have the similar factors, which will be this. We don't need to explain that. I think we already have the idea of what the provision will be. So if you are to do this, you must make sure that this is it. Now, one of the things that we need to adjust is also the issue of deducting that expense. If you check here previously, this one here, let's come here. They'd say that this was, of course, previously what happened to it. They say Neptune and Venus Limited engaged in a research and development of the new product, the local company, and the development was already for sale by that period. The market research revealed that the product was selling well and it had high demand. Due to this, there was that. And then they say that this is what they say. The total cost incurred to this project by Neptune and Venus before the product is ready for sale was that. So it means probably previously they had not deducted it, they capitalized it because it was like they were making a certain issue on it. So all that makes sense for us to know how to deal with it from that case. And that is what we need to fix up, and we get what it will be from that angle. Now, if you check, I think you may notice that, as I said, there are two ways or two approaches you could use. And that is the other approach. So here, we could insert here and have how the amortization will be dealt with, because it's a future issue. As I said, it has some concern which relate to that. So we have noticed that if you check that, we have it was 15,000 as a fact of that, which is, of course, they say that it's supposed to be incurred and expensed that period from that area. So we'll deduct that, and then we have this, which of course we could pick also. It's a similar figure, which you could pick that, and it gives the same figure. So you may notice if you use this, you get the same figure, which is that, and that is what I wanted to say. It depends. So the flexibility should be there for you to understand. And this one is also an adjusted. Now this one is not this one. It's just adjusted, but profit after tax, PAT. Adjusted as it is adjusted mainly profit after tax, PAT. So you could check that, and that's the case. So I think I've given both versions. So it means if you get that, that will be the case that will be relating to this. Any question on that? Question? So profit after tax adjusted is that, is it? So they give the same. If you check, it's the same. So anybody who did this, no problem. Anybody who did the other way, no really problem about that, as they'll give the same version of the things you have. Okay.
Excuse me.
Yes.
The concern I have is that actually what I think what you have done is the one that is correct, but we checked the marking in the marking guide to find that there is a different story, because for them they considered, actually they assume that those figures in the additional information are also in 1,000. I think that's the mistake that they did, and that's how people fail, I think.
Now, we started by adjusting those issues to make sure we are on the same page. I think for us, if you check, if we have made an error, maybe you could tell me on the units. But I think we did best. We try, and even we are doing together with you to make sure that we are on the same page. And I think we did better, unless otherwise, if there was any issue, if I posted any wrong figure. In fact, somebody told me this should be in thousands. So if they did an error, you know, it is sometimes I don't know what can say about that, but it is somehow, you know, what we it is what it is. You know, sometimes things happen. That's why I say they should also allow moderation of the answers. I don't know. They should. I don't know. I don't know what happened there, but that's how it is. So probably it should be that way. I think the problem you are saying here is like they reduced, instead of 1.5, they reduced, let me see, they reduced the zeros, is it?
Yes.
They kind of covered the
Yeah,
zeros
and
out.
they assumed that
No, that's not
those
the
figures
only
in the
issue. They have missed most of
1
the
million,
components. Like
the 1
non-cash
million
items were
in-
not considered.
Non-cash item,
Yes,
really?
yeah.
Non-cash?
Non-cash items
was
were not
considered.
considered, and oh, I think they have added it up together.
Added up together.
Yes.
Okay. Then why is this one, if they remove the zeros, is it adding up? Is it the same? Because here, if you remove the zeros, you are saying they remove the zeros. So it means this was 500 and the other one was, this was...
No, what they did,
There is no issue
what
with
they
that.
did, like,
They have rounded to the nearest million. That is okay.
yes, for them, they rounded, they consider, they put them in millions.
in millions. Oh my God.
Yes.
Anyway, that's how it is. But I think for us, you know, the idea is for me to deliver the proper concept, and then the struggle continues up there. So it is up to that. But I think the idea is that we have followed the pattern properly, and this was in thousands, as we noticed. So I hope, and here we are doing everything in thousands. So it should be this way. That should be correctly how it should be done. Anyway, let's move ahead and see.
Actually,
Now,
sir,
yes.
where 500,000 of provision of the next year was coming from?
This one?
Yeah.
Okay, this is the case. Remember, in this question, they have a provision of bad debts, and they have how it is transitioned between 2 years, 2020 and 2021. Now, these are opening, these are closing. This is opening, this is closing. When you think about it, then it tells you there's differences. Because if this is opening, this must be coming from here, it was posted here. If you check properly, you notice that that is how it moved in terms of what we have as a basis of the case. So if that is the case, then you may notice that what I did was simply try to flex that and see how it is. Sorry, I was trying to check something here. I think I wanted this. So this figure here, this figure is the one that is here. It opened and it closed and became opening, which is what I did down here. Which is what I did here. It was opening and then this was closing. The difference is that 500. Now I've even done a T account to show you. This means it decreased. This figure decreased to this figure, and it decreased by 0.5 of a million. This figure was here and this figure was here. It increased. And that's why I got those. So one is behaving like an income. As you know, the provisions could either be plus or minused in the income statement. So this one was, of course, minused. Sorry, that was minused. Then the other one was plus. This one here. So to fix that, I do the opposite. And the opposite means I minus this and I do plus this to cancel it out. That is the idea. So unless there is anybody with a question, if you don't have, that is how it is, we can go to the capital. No question.
Question, sir.
The question you are doing is one of the most marks ever set, 18 marks. So it means it contains some Gahundas. There are others which are very easy. Yes?
In the second method, Why do you charge again this amortization? Wasn't considered to arrive to the net profit after tax?
Not really. Not really. You could be correct from your perception of what you are suggesting. You are considering that they may have amortized it. And why we are adding it back? They did not. They did not amortize it. Let me say it that way. They did not. Why do I say they did not? This thing, they made it. And when they made it, they knew that they will sell it. So when they sell it, it was an asset, not an expense. Something you want to sell, it is supposed to be, first of all, an asset, and then you sell it. Is it true? Like inventory, you buy, it goes through, it is a purchase, and it goes through the inventory, and it becomes an asset that you sell later. So for them to say here, for them to say that Neptune and Venus, Consult Limited had engaged in a research and development of the project of a new product of a local company, the developed product was ready for sale. Do you think it was expense on 1st of January 2020? No, it was not expense. You cannot expense something you want to sell. Something you want to sell, it is an asset, of course. So an asset, you sell it and you get money from it. So it means by this time, it was capitalized, it was an asset because they know it was ready for sale here. I hope I'm making sense by that here. Up to the decimal, the full stop, sorry, not the decimal. The decimal and the full stop seem the same, but is a full stop. Sorry, up to the full stop, that is showing that they had capitalized it because they say it was ready for sale. And something ready for sale, simple facts. Think about what do we sell? We sell inventories. Inventories, when you buy them, they are assets. When they are assets, they go to the inventory account and later on move out as cost of sales and be transferred to sales and move ahead, and you charge your profit as such. So my way of thinking was it was already capitalized here, not expensed. But now in 2020, they are saying it is going to lose ground because they are saying, yes, it was something good for that period, but only last for 2 years. So we need to expense it. We need to expense it, as it means they did not expense it. It is an assumption which I'm taking in consideration, and is also something that somebody may argue against it. But from my point, why they give additional information is that they wanted you to deal with it, and to deal with it means there was something that which I'm explaining here. They capitalized it only and never expensed it, and that's why I need to do that. Okay, anyway, I need to do the capital employed. I think it's taking time. I thought this question would be finished in the few minutes. That's the problem of doing a past paper question, but it carried good marks. It is necessary for you to get the concept here. Any other questions? No other question carried good marks than this one. So whatever you are doing is the top of the top. So it means if you understand this, any minor question can never be a big deal on your side. Any minor question can never be a big deal on your side. Because you will have the concept that you have gotten the best from the past paper. So anyway, let's go to the capital employed. Now, the capital employed, I need to also adjust it. And I could only get the capital employed if I come. There's something they said about capital employed. I forgot where it is. I forgot where it is, and that is it. Just a minute. Just a minute. Sorry, somebody was kind of distracting me here and there. But what I was saying was that we need to do the capital employed, and I think I could easily do that, and then we move ahead and see how to fix that. Now, if you come here, there's capital employed factors that were given, because of course we need to have it for us to use it. So I could check through and see what was the capital employed. I think if you check here, you notice it is here. These are the details of capital employed. There is a total equity, and then there is total debt, which is there. So these two here, hopefully, they are the ones which sum up to this. If you run through, you'll see it is exactly that, because they gave that. If you add, of course, these two here, which is this plus this, they give you that, and that's what you get. And then you run it that way, and you get what it is from that point. Now, if that's the capital employed, we can easily now bring it here. We have, as it is from 2021. I think we can follow the pattern here. 2021 and 2020. Was it 2022 or where did I get this? This I think should be 2020. Yeah, 2020. So I could start with the capital employed. I could call it, capital employed at the beginning. Before adjustments, remember we need to do adjustment on it if necessary, if it's not there. So I'll pick this figure, which is that one there for 2021. And then that is also the figure here, which I need to adjust and see what they could bring to the surface, which is also, they say it is this one here. And these are opening, they are saying they are as fast as at the beginning of the period, which is let's say January only, January like that, and then 2021, and this is 2020. So apart from that, I want to do some adjustment if they are there and see what they could also be required from that point. Now, one of the adjustments that I need to do is, of course, I need to check, if you go back here, I've enlisted that. We need to check if there's non-capitalized list, which is not there. We need to check if there is any research issue which is supposed now to be capitalized, goodwill written off, and provisions. All of those are the things that we need to check in the process of what we are doing here. Now, to do that, I need to come back and also, of course, analyze the factors that we have there. If you check, there is, of course, research and development, which was there, which we need to know. Apart from that, there is also provisions that are there. So these two are there. This is there, and I noticed there is also the issue of research. I didn't see any goodwill. I didn't see any non-capitalized issues which I need to deal with that. Provisions covers for non-cash. I don't know why they split it, but I always think the common name could be non-cash expenses. Non-cash expenses, which is that. I don't know why it is writing like that, but it is non-cash expenses. I'll check there. It is also part of the non-cash expenses, which I need to factor in and see. I think it change into the language, but it's non-cash expenses. Provisions are the biggest part of what we could classify as also non-cash, the way it behaves. So if you come here, then let's start to adjust that. So we can start with, of course, the factors that we have there. One of them was research. Research was 1,000 here. So there is research in that one there. So we could take that and factor in here. It was same throughout the same year. So why are we doing that? Because they expensed it. So it affected equity part. And equity, retained earning is the biggest part, or the most, I could say 99% of the equity part is commonly attributable to the retained earnings or the profit aspect of it, which is always expenses and incomes, which are always they make that part. Now, apart from that, that is what I need to fix that. Now, there is other non-cash expenses which we noticed. Other non-cash expenses which affected retained earnings are also supposed to be added back. What are those? They are here. So here I've said simply add non-cash expenses, non-cash expenses, because those are the one they call provisions here. So simply to put it in proper general name, just put non-cash. So non-cash here is we have also this. All this should be brought here, and this should be dragged down here, and that is what we have as it is from that area. And we have that, and that is a non-cash expenses which will be related to that. And that is the case, and this is, of course, what you have as a fixed factor here. Now, apart from that, we need also to look into other issues that we have. We have also other non-cash issues. Provisions. Provision is also non-cash. Still, this provision is a non-cash element. Also that affected here. So you need also to factor in it and deal with it. But here, because it's capital employed, they post the balance. So we'll only take the balances because this is as at. So we take the balances, and the balances are this one here for 2021 is that one there. And then here we take the balance, which is that, and adjust it by adding it back. And the balance is closing balance should be this one here, because we're adjusting the previous period. So we take these opening balances there, because as I said, capital employed starts with the previous period most times. So you have that, you added that, and you get what it is. I think this one is adding plus the debts. I think it is adding the debts. That's why it is, sorry. I could drag these back here. So it's something like that. So we have what you could call adjusted capital employed. So that is what we're having here as a factor of what we have. We have adjusted capital employed. Unless there is any question on that. So this is adjusted, as you may notice, and it is a capital employed, which we may need to use there.
When we capitalize the other research and development, they have amortized the cost on research on product development cost.
Cost on?
They have amortized the cost on research and development.
No, we can't. We can't, because they said it is going to be having no future. So it means it has no economical benefit to come. It doesn't add any economy benefits. If it added, it is already captured in the sales. So we don't need to include it there. If it added, it captured in the sales, but it at the same time, it is losing ground. It is, so the cost that they spend on it will not give any future return, can I say, any benefit from it beyond this period. It will not.
But you see, that cost was incurred in 2 consecutive years. That is 2020 and 2021. So if the cost, if the cost of the product, if the
they said it's true. They said to be realized in 2020 and 2021. You're correct about that. Oh, so I should add it here. You're correct. If it is realized, we'll have to capitalize that figure because they will gain from it. They will gain for it, capitalize of a research, which was sold. Research sold in the 2 years. They said to be sold in the 2 years. So it's exactly the 2 years we are in. So you're correct about that. I think I had not put that factor in, but it's supposed to be realized in this period, which is a factor that we'll consider for that. It will be realized because they are saying it is, of course, it is going to be realized as sale. And when it's realized as sale, it means it improved the economy for our 2 years. It improved the economy for our 2 years from that period. So the capital at the beginning of 2020 was benefited from it because they made a sale. And that sale is because of the investment of 15 million that came from it. And also they made a sale in 2021 at the beginning of it, and it gave them again another 15 million. So it's correct. They sold it and made some economical benefit from it.
Why, hello?
Yes, please.
Why provision for doubtful debt?
What?
You are the provision for doubtful debt.
Yes.
This 4.5 and 5 million, you have added them instead of adding the difference.
Because the idea is this: the balance sheet. This comes from the balance sheet. The balance sheet. This is as art. It means capital employed is a statement of financial position component. So mostly the idea is that if you go to the balance sheet, we deal with balances. So I need to add the whole figure of the balances, not the changes. Now, for you understanding this, I could easily explain this. Let me explain something also about that. You know, balance sheet is at the end. This is what usually happen. This is the balance sheet. This is the balance sheet. This is like opening balance sheet. This is closing balance sheet. Here it is the income statement. The income statement is what is deal with what is called changes. And that's why the figure we get here goes to equity changes. But here we deal with what? Balances. And here we deal with balances. So it makes sense if you need to adjust anything, how it affected it by whole figure, which is 45. You are fixing because the figures there are accumulative. I hope it explains why. The figures there are as at, not for year ended. The good thing is that all of you are from reporting classes. So when I'm saying as at, you get the point also. You understand why I'm doing that. It's because the balances are the ones to be adjusted here. The balances are the ones to be adjusted here. And that's why I am fixing the balances, because the balances had been adjusted. Remember, this provision is accumulative. So over the years, you need to adjust the whole of figure. That is the idea again. Over the years, you need to adjust the whole figures because it has accumulated over the years. I don't know how many years it has been in business, but we need to adjust it as per that period. So that is why. Now, this ones, you could say why? Because they say they gave us only for 12 months, and we know they are only concerned with 12 months issue. As you may notice here, they call them provision for court. So we don't have any other balances issue, but bad debts is always there because it's routinely what you do. Their business is not to go to the court. Court is one agenda for one time, and it disappears as such. So this one came from the court. It means it's a one, what we call one-off affair. And even these allowances for inventory is normally rare aspect, but provisions is a continuous thing we always provide for. And this one here, it has capitalized because it is a capital research that was sold as it qualified to be a capital asset, and it improved the business. It qualified to be a capital asset and improve the business by becoming a future productive issue. Anyway, another question? Delete that. So if there's no question, we have all the data. We can now do the EVA. We can now do the EVA and then probably introduce maybe the other parts of transfer pricing. I thought maybe I'll do more on it. But now the EVA is, of course, you take, let me put, we can pick adjustments. Let's use the word adjustments and probably use just adjusted because they give the same. Either way, you could pick from here and you could pick also from this side. No real big deal about that. We still have the same aspect here. And this comes from 2021, and this is, of course, from 2020. So those are the adjusted. We have also done an adjusted on the capital employed, which we, of course, need to multiply. But we need to take this and multiply with now Wachacha. So I need to multiply with Wachacha. So I have some tasks to do a Wachacha multiplying issue. So I'll need to multiply with Wachacha, and that is what I need to, of course, look forward towards, and then I do that. If there is no question on that, I need to have it done that way, and then I'll look into that and see. Yeah? So this is supposed to be multiplied with the Wachacha. Multiply with Wachacha. So now Wachacha, to multiply with Wachacha, we have an additional information that will be used for that case. And I think it's given us a note there. So you may have it there, and then we use it as a factor there. So let's use it that, and then we say how it can easily be done from that angle. And then from there, I could easily use whatever I'm using from that issue there. So we have that, and we use it as such. It is not working for me. Anyway, let's use that as we see. So multiplied by wachacha for that case. Now, let me come here and pick my wachacha factors just to keep up with time quickly, and then I deal with that. So there is a, just a minute, I need to take some water a bit. There is a pre-tax cost of debt, and then there is cost of equity, which is also given here. Then the tax rate is given there. So we need to use that, and the intention here is, of course, as I said, your intention is to multiply with this figure here, and you get what it will give you from that angle. So from that angle, we'll multiply it with that and find what it will give us from this. So I need to multiply that, and then I see what it will give us. So take the adjusted cost of capital multiplied by wachacha, you will have what it is here. Now, how do we get our wachacha? We have the data here already. We don't need to waste so much time here. We have the data here. So we can simply bring here, because of interest of time, it is this one here. I need to use this 2021. I'll call it a working, I'll adjust it later. So this is the case. So if you check, they say the cost of debt is that. The cost of debt, sorry, the cost of debt is equal to that figure. So I need to use it to multiply. And remember, I'm supposed to get it using wachacha. So we'll take the cost of the total value of equity. The total value of equity. So what is the total value of equity? So here I want to multiply, first of all, cost of debt. Those who are doing managerial, they know this. I need to do this. And here I'll do cost of equity. But all of this will be multiplied by weight, and all of that will be multiplied by weight of debt. So to fix that, I'll pick this percentage here and try to get what are the values. What are the values involved in this? We have, of course, the values that are involved in this, and we can easily get the proportion. Or let's calculate the proportions, first of all, separately here. Weight of debt and weight of equity separately, because if I mix like that, maybe somebody else will still struggle with that. We have the value here, which is equal to that, which is given as such, which is the total. Sorry, it's the total of that one. Equity is this. And if you drag down, you notice there is also debt. When you sum up this, this gives you that figure. And similarly, if you drag to the other side, I think they should be the same. If you take it to drag to that side, it should be that way, and that should be what you have on that side. So we have it as such, which I could check if it is the same. Is it the same? Yes, it's the same. So if you check that, then I can get the weights. To get the weights, of course, I need to get, this is for 2021. This is 2021. And the other one is 2020 as it is. So I could get the weights. To get the weights under the respective years, I could easily also get that, and then I use it for that. So you need to get that weights on your own. So here, if you come, we have to get the weights. It's this one here, divide by this, and you get is equals to that. So approximately that would be the figure. And then this one here, divide by this, you get what it is for that. And similarly for the other one, you have this, you divide by this, you have that is weight there. And if you drag that, of course, you get, this one does not really work there, but it is just 66 for that. So it gives you 26, something approximately that. So those are the weights, which can assist me to get the wachachas here. So for the cost of equity, like in 2021, it is this one here multiplied by 8 that is there. And then for the cost of, that's cost of debt, sorry. And remember, I forgot, you should multiply by 1 1 minus, take away, or 0.3, 4.7, sorry, 0.7, and you should get that. I think I need to put multiplication there, and I get that. Here, the weight of equity is this, and this is supposed to be multiplied by 15%, which is that. So when you sum up that, it gives you your water share for that case. Similarly, for 2020, it is this 26. Now you need to multiply this by 8. Remember, the 8 has to be multiplied by 0.7 out to take that interest that we said is usually covered there. Remember, this is the reason why we only add back the tax relief, as you may remember. That is the reason why. Take this 26, again, not 26, sorry, 73 point something, multiply by 13, and you get is equals to that. When you add this, sorry, when you add this, that is 11. So you have 11, and that is what we have. And this is our cha-cha. Later on, I will insert here to say this is workings for Wachacha, which we need to, of course, do that. That is Wachacha workings. So we have that. Here, it is said to be 12. Somebody's asking a question. I've mixed up. Let me see. I think I did correctly. Here, I used this, and that is let's just change the name. This is equity. This is a debt. I think that is why you're saying that, because debt is smaller. I could just change the names, because this I think is correct, and I think this one is correct. The way it is arranged up here, if I shrink this a bit, I think is arranged in form of this is equity. Yes, equity is a 3 something, which is that, and then debt is equals to that. So you're correct about that. Thank you for that. I had to mix the labeling or the description. So equity debt there is 121 and something. So it's okay. So debt is this one here, and that is also what you have as a factor for that. So hopefully it is correct now. So that if I come here, let me see. I picked that. Yes, and I take away the 30, the 30, and I remain with that, which is correct. And here I did the same. I picked that and I take away that, so it is correct. And here I picked that, which is correct. And here I picked this, which is also correct. So that's the idea. I think is the labeling for that case. So you get that one is approximately around 12 point something, which if you could round off could be approximately maybe 13. If somebody wants to round off to percentages only without, and the other one is around 11. For 2020 is around 11, and the rest is history for that case. So you come here, take that figure, which is this one here, multiply with the percentage here. The percentage is this figure here, and I think I need to divide it because it is in percentage. So I could divide by 100, and I get that is the figure there. Then, or convert it to percentage while it's down here, because it's possible to do that. And then take also the figure, which is, of course, as you may notice, we take this percentage here, and we divide, of course, to make it 100%, and then multiply by the figure, and the figure is that one there. So you get that. Similarly, that's what I've done for 2021, and then similarly, that's what I'm doing for that. Now, it needs to be deducted, so we could put a minus now, and then put a minus also from this. So if you run this down here, you get what it gives you, which is equals to 197 something, and this one is equals to that, and that is the ever. So our ever will be that. Our ever will be that, and those are the figures which we'll get for that. Unless there is any question, if there isn't, that is now the ever we have computed from that. No question? That is the ever. And if you check, you can do comparative, 2 years comparative. It shows that it increased. As you may notice, it increased from this figure here, which you could say, you could find the difference. It increased, and that is good. Over the 2 years, also it shows ever has been growing. If you want to convert to percentage-wise, you may also convert and even give further interpretations. As you may know, performance requires such interpretation. You may even give in percentages if you need to. This one is coming from the sphere here, and even you could qualify it in percentages if you want to. So if you may have that, and you could easily explain, maybe even in percentages where as it increased by 64% within the 2 years, that's good for us. So any question on that? That is what I need to do for that case. Unless there is any question, if there isn't, that was set for 18 marks, and we have gone through. Unless there is anybody with a question. If there isn't, that is it. So forever, next, there is no another question which is of that nature. The rest of the questions are easily done. You could check them out. I'll try to do maybe other more from past paper and add on this Excel, but generally, that is the idea of how it's supposed to be analyzed. Of course, there could be ups and downs here and there, but of course, through practice, you could polish that and maybe improve on it, right? Or get at least some averages, even some adjustment here and there. Somebody can easily pick something from it and move ahead, because it's simply analysis, which you may need to do, and then you get what it is. So if there's no question, that is what I could say. Eva is also not perfect. It has limitations, unless there's anybody with a question on that. But Eva is not perfect. It has its own limitations, as I have shared again. It is absolute measure. There is some things which it assumes, which we also have questions on. As you may notice, it's not really perfect as you may think, or you may want it to be. It is not perfect. It has some issues, and those issues gradually they are still being fixed as we progress on to that. So if there's no question, I'd wish to just maybe, I don't know, we still have, it's almost like what, 20 that, now we needed to talk about value-based management. So I could easily just go through value-based management quickly. Value-based management, I think most of you know, is more theoretical. As you go through your issues, you may notice that value-based is more theoretical. Is more theoretical, and it is doesn't require so much of issues from my side. But again, you could read it and get more knowledge about it. So that's another issue which is also we need to cover from this area that we are going through. And I need to talk about value-based before maybe I'm thinking like based on time, maybe I want to talk about transfer pricing, but I don't know, some of the heads may be too tired for that. So I would easily feel like it's necessary maybe to talk about value-based, and then I go through and then I explain some things about value-based, which is related to that. So just to talk about value-based, I've made a slide again, which can assist us to go through that, and then we can easily move ahead. If there's nobody with a question on what I've done or what you have done together, because we've been doing together. So if you have a question on it, you can easily ask me. If you don't have, then I can easily also move to what we call VBM, which is value-based case of that. So let me open that issue here. Now, value-based, as the name says, I've always said, unless the name is not coordinating or not relating to what you're dealing with, but commonly, value-based, most of the things we go through have a meaning to the name, or the name is supposed to be called, is supposed to be named. The concept is supposed to be named of course, what it is doing or what it is going through. So value-based, as I said here, you may check here, is an approach to management that aligns the strategic objectives and cultures to focus on maximizing shareholders' wealth through the measurement of its discounted cash flow. So there is a value-based approach, is an approach that prioritizes interest of shareholders as its primary focus by aligning the company's strategies and objectives, culture, and processes. The prioritizing of shareholders' interest is what is the key component of value-based issue here, and measurement of value through discounted cash flows. So mainly there is implementation of value-based aligning strategy with shareholders, which is developing strategies that go with shareholders, developing objectives and performance targets, and creating a culture that supports value creation. As you have seen, the metrics of measuring value based is NPVs, the EVAs, and the rest of those cases. Yes. Somebody's saying hi. I'll send that later on. The book, which book? Okay, I think it's a slide which I'm using here. So there is you need to foster the culture. I've studied, I was doing one research where they say culture, they say this, culture eats strategy for breakfast, or it is a breakfast eats all. That's something like that. So anyway, the culture always affects. I'll check that probably from explanation, but they have always said something like culture always affects things. So culture eats strategy for breakfast. What is your strategy? It depends on your culture. If the culture of the company is to work hard and promote the job system and be reporting to the work on time, then it means that is probably a culture that supports the strategy. And the strategy is where you are heading to. So those are the cases. Improve decision-making and resource allocation. That is the benefits of VBM. And there's a question which was tested on VBM. If you check 2023, there is VBM. I think 2020 something, there's also VBM. So VBM provides, improve how you make decisions. VBM helps organization to make informed decisions and allocate resources effectively to maximize shareholders' value. Number two, enhance accountability and performance measurement. VBA provides a framework for accountability and performance measurement, enabling organization to track their resources towards value creation goals. VBM on long-term valuation creation leads to sustainable shareholding wealth and all those cases. So challenges of VBM, of course, resistance to change. People don't like change and organizational inertia. VBM may encounter resistance due to organizational inertia and they need to change existence practices. People don't like change, so they may always not like it. Difficulties in measuring and value and evaluating values, accurate measuring and evaluating value in complex business environments can be challenging. And balancing short-term and long-term objective can also be one of the biggest challenges you'll face in the VBM issues as it is. VBM is powerful approach that helps organizations to align strategies, objectives, cultures, process to maximize the shareholder wealth by prioritizing the shareholders' interest and using metrics such as discounted cash flows. Company can make informed decisions and create long-term sustainable issues. Now, I answered already a VBM somewhere here. I'll attach it. Excel is more theoretical, so I feel like it's kind of somebody could catch up with it. But if you need further issue, I could share with you. I have maybe, I don't know if you, I think most of you have Kaplan books here and there. Yes.
Yes, I want to understand this concept of VBM, which is value-based management, and we have two. We have the business interest and we have shareholders' interest.
Yes.
So which one is the major focus by the value-based management?
The shareholders' interest.
So it doesn't mind about the business interest.
Not really, because it is all about the shareholders' interest, value-based, because the shareholders want value. Business interest, let's think about what is business interest first of all, because shareholders' interest is easy to know. I want to maximize my wealth. I want to increase what I've invested. And I want to have proper accountability and, of course, proper strategies. That could be one of the issues the shareholders would want. But what is the business, interest? Business interest is merely the same as shareholders' interest if you check properly, because the business interest, who started the business is the shareholders. You get the point? The one who started the business or the one who put money in the business is a shareholder. So he put the business, he is the the starting point, or he's the igniter, or can I say is the ignition. The ignition to the business, or the one who makes the business move, is the shareholders' interest, which are more paramount, which is realized through business interest. So shareholders' interests are realized through business interests. I think in one way or another, or mostly, they work together. They should work together. But the overall person who is inside it is shareholder.
But the concern I had is like the one that improves the shareholders' ways. It's like when you increase the dividends, then you are adding value to the shareholders. But again, you are reducing the value of the business by just taking cash out of the business. So I don't know which one is that is major focused by value-based management.
Okay, when it comes to returns, of course, the shareholders, their main interest is to get, first of all, these things work together. Let's agree that way. Because you can't pay dividends and kill the business. Now, how will the shareholder increase his value when he's killing the business? So they work together, or they should work. For you to get dividends, you should make sure the business meets its interest by making more value. That's why I'm saying they work together. You can't pay yourself. You have put a good question ahead, or to us, or to me, that is that somebody is paying himself dividends at an expense of the company. Then that person is not thinking. Good shareholders should know that business is there to make us grow, or make us have what we have. Is like you can't kill what makes you do what you do. You can't kill your job and you expect salary. It is not really workable. So you must, they say in Kiswahili, they say kulea kazi. You must protect the job to make salary, is it? So that is the same logic. You must protect the business to make the value, which is now the value that goes to the shareholders. So they work in hand. Anybody taking out dividends at an expense of the business future is not really a strategic person. A strategic person or a strategic shareholder should know that we can get dividends only if the business is performing well. So nobody should take out, yeah, it is true they take out that, but only dividends are supposed to be declared in a proper way. Dividends are supposed to be declared if the business is in a good status and it can pay that dividends. If it is not, then dividends should be declared. That's why we say shareholders get what is called residual income. Residual income means they get the balance, or they get the last payment of, or they are the last option of discussion upon all that are settled. So there should not be any shareholder riding his interest beyond the business. The business should first of all come first, make the value, and then create the value that can be paid to the shareholders. I hope I got the point. So there are steps, strategies, and all that. I'll give you this. You could read that, because I said I don't want to take myself into the theory issues. They are easily understandable, and you could see. We just need to know what it is. The steps, of course, are always in line with what you're talking about. You need to develop strategies, as I said. You need to develop what are our targets. Our target is to improve the business by making more sales. Well, how do we do this? We apply through implementation of operations. And then after implementing, how did we perform? It's easy. And it is a structure of any other issue we do in strategic. You have to plan, which is through strategics. You have to go down and set your targets, and then your targets are supposed to be working with your plans, and then you operate. After you operate, you evaluate, which is what we do. That is the idea. Unless there's anybody here, it is more like just explaining those issues. There's really not much question on it. Most of the question here are not about it. In fact, like this one is just explaining, write a report and all that. I'll give you that. I think it's part of what you may need to. And if there's no question, that is it. It is nothing I need to talk about on it. There's nothing I need to talk about that. It is just to explain what it is. But again, there are questions which are set on that. You check 2020, 2023, there was a question which was there, which is on VBM. And all you need to explain, it is a concept which is trying to align its, strategies, culture, processes of an entity towards, improving the welfare of the shareholders through increasing the base of its value, or through increasing its welfares or wealth, which is of course what translates to the value of the business. So anyway, if there's no question on that, that's what it is. Now it is almost 8:30. So next time we'll be going through the transfer pricing, which always is part of what we need to do here. Now, transfer pricing, there's some good questions here and there, but just to give a background, transfer pricing is basically something that is also interesting. It carries some good marks whenever you check it out. You'll notice that's something you may also want to also go through. So the transfer pricing, my intention is that I don't think it's not necessary to introduce it if the minutes are a few, but if we find it necessary, maybe we could do that. But I feel like it's 8:30 and it's 8:31. So transfer pricing, I was trying to summarize. There are questions here. You could check through. Unless anybody has a question, I feel like we may not be able to do the transfer pricing today, because if you start transfer pricing, I may need to demonstrate what it is. But generally, an overview of transfer pricing is a price which is charged within the organization, and you need to know how it is. There are some questions since 2020. You will see August 2021, there's a question. July, there's a question. There's also international transfer pricing, and there's also transfer pricing just on it, and all that, which are all transfer pricing in August, including August last sitting. There is a transfer pricing. And transfer pricing goes along to the international level where we need to deal with that. So I think it's better if I could stop here and introduce transfer pricing when we are all fresh in the next class, unless you are still fresh. I don't know, you will tell me, but I think it's better if I do transfer pricing in the next session to make sure everybody understands what it is. There are transfer pricing methods and the rest of that, which we need to go through when all of us are in a good shape or are fresh, because we'll need to do transfer pricing and it has questions. If it was a theory issue, I'll easily go through quickly in the minutes remaining and stop there. But it is not something you can say you will do like in the finishing, like by explaining it. No, transfer pricing needs to explain what is transfer pricing, what goes through transfer pricing, what are the rules of transfer pricing, and then of course how the rules are developed arithmetically, and then how to apply an example and how to apply it in a question. So if there's no question, I think it's better if we could cut it off here, so that in the next class we'll be focusing on transfer pricing. After transfer pricing, I think we'll do the non-financial issues and strategic management issues like BCGs, microportals. All those are theoretical issues which could be read in terms of whatever we go through. So is it better if we stop here?
Yes.
Yes, it is better to stop here.
The minutes are very few. I can't do anything constructive by the minutes remaining. I thought we'll finish the question early and do it, some more introduction, but we can stop here and then leave it here. And we leave it, we come when we're fresh. Transfer pricing has some serious questions which need to be done on it. So it needs a good day and a fresh day. That is what it is. So we could stop here, and thank you for coming, and good night. If there's no question.
Thank you, lecturer. See you.
See you. Thank you. Okay. Thank you.